This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, now let's shift to the gold market. The gold market, as usual, the situation is really sophisticated and it's very difficult to make analysis of the gold market currently. That's why I suggest that you will read the high time frame analysis in our thread that dedicated to the weekly time frame and monthly time frame, because they contain the major idea what we would like to do on the gold market currently, because it's not as simple as it looks on the first glance. From the one point of view, we see the solid plunge down, the real sentiment of the short-term perspective is really bearish, but at the same time market now is extremely oversold on the monthly time frame, and we currently can't just take the short position and enjoy the life. It will be dangerous. That's why we need to adopt the special tactic in such circumstances, and the major idea of this tactic is, until market stands at oversold on the monthly time frame, we can't pretend on the move below the current lows or whatever lows will be on the monthly time frame. Currently that lows is right here, so around 1480, 1470 area. So if any retracement will follow, we could take the short position with the in a row with the overall sentiment on the market, but we can't hope on the move that will be significantly lower than the current low, because, as I said, market is oversold on the monthly time frame. Now I hope that you will read this analysis, but now let's focus on the short-term perspective, what we could expect in the nearest couple of trading sessions on the gold market. First of all, you could see that here we have really significant move down. Market is extremely oversold on the daily time frame, but still that is not the volatility breakout, because if you will take a look at the trend oscillator, you will see that market has reached even greater oversold condition in the August of the 2011 and the same level of oversold somewhere around in the 2012. That's why we can't call it as a volatility breakout, but still this is the significant level of oversold. Well, unfortunately we do not have any fib extensions or something of that sort that will tell us that here is the support, or any other natural support we also don't have. All that we have is just the oversold on the monthly and daily time frame. And take a look, the target that is based on the harmonic swings. So you can see, if you will measure the harmonic swings on the gold market, you'll see that the price has reached the target. If you also could treat it as the ABCD pattern right here, if you would like to do this. But you see that opposite harmonic swings shows on the retracement to the 1564. But as we have suggested in our weekly analysis of the weekly time frame, this retracement will be a bit deep, because the major resistance on the monthly time frame that has been broken stands around 1535 area. And from the bearish point of view, we do not want to see the returning right back inside of the long term, on the inside of the 2-year consolidation that hold on the gold market. That will be a worrying sign, because if this will really happen, the market could take out of these highs of this candle, and this could turn to the wash and rinse of the previous significant support area. In this case, we could pretend on the move right to the 18 sharp. That will be the nightmare for the bears. From that perspective, all that we would like to see to be confident with total overall bearish, technically bearish situation on the market, we want to see that market stop the retracement around 1535 area. Well, and I think that this is really possible, because take a look at the speed of this swing. That swing that is common for the previous swings. If you will take a look at the daily time frame, you'll see the two same swings to the left with the same speed. But here we see the speed of this leg is much faster. Let's just tell that this momentum is greater than here, and this tells that market could limit the retracement only till that area. This is just the pressure of the sellers, and it probably just could not let market to continue move higher. That's why personally I will watching for this level as the potential ending point of the retracement. Also because, as I said, I prefer to see the ending point of the retracement around 1530, 1535 area. On the daily time frame, you'll see that is also the confluence resistance area. By looking at the hourly time frame, we see how it could happen, because this plunge down is an excellent context for the Jordan directional patterns, and they could be either double repo or bread butter. If it will be the double repo, then it will be the bullish, short-term bullish pattern. That's just retracement at minimum to the 50% resistance of that swing down, and that will be probably the area around 1530 that we would like to see. If it will be the bread butter sell, the bread butter pattern is the continuation pattern, and it based on the previous momentum. So the first retracement will be used by the new participants who would like to join with this move down. And usually the bread butter should reach first the significant resistance area. And I think that this will be somewhere between 1512, that is the first fib resistance, and take a look, weekly pivot point. That stands around 1517 area. So that is an area for the bread butter. If the market will reach it by the single swing to the upside, this will be probably the bread butter context. If market will not reach the significant resistance and will show the double repo, I mean the first penetration of the 3x3, close below it again, second penetration and close above the 3x3, that will be the double repo buy. In this case, market could reach this level. Speaking about the bread butter sell, I also do not want to exclude totally the possibility of the deeper retracement, because bread butter could lead, for instance, just to retracement to the downside when it will work out its target. So it might happen that market will show the context for the bread butter, shows the continuation based on this momentum, and later will show the another leg up. This could be ABCD pattern to the upside. That is also possible. But anyway, both of these patterns could give the excellent opportunity for the scalp trading, so that setup is mostly for traders who trade on the hourly time frame and lower, on the 15, on the 5-minute charts. That could be really the work to do. So the context as the thrust down is really solid. So don't miss these opportunities, because they could be really interesting. For other traders who trade on the daily time frame, well, you probably could wait just when the retracement will finish. The retracement will end on the daily time frame. And as I said, I prefer to see the ending point somewhere around this level. If this will happen, later you could drop your time frame to the 4-hour time frame, 4-hour chart, hourly chart, and wait for the reversal patterns around this level. If you will find any, then we could try to enter short with the target somewhere around 1470, 1480 area. That is short-term context for trading on the gold market. So that's all that I would like to discuss with you in the current research. So you can see a lot of opportunities, but a bit sophisticated market for trading, that is gold market. Well, let's see how it will turn, and don't be hasty, wait for clearer setups, because situation now is really gold markets now is under doom and gloom. So you can see really significant plunge down has happened. And again, try to read the analysis of the higher time frames, weekly and monthly, because it will let you better understand the picture totally in the complex view. You could get a complex view on the gold market in general, and also the fundamental analysis of the gold market suggests some interesting moments that let us be confident with the current overall bearish sentiment on the gold market.